Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 14th, 2025, we're putting the spotlight on USDJPY, a currency pair currently experiencing significant shifts driven by both macroeconomic factors and geopolitical events. The US dollar is reportedly regaining some ground against a broadly weaker Japanese yen, a trend partly fueled by political uncertainty in Japan following the resignation of Prime Minister Shigeru Ishiba. This uncertainty, coupled with potential candidates opposing the Bank of Japan's monetary tightening, is increasing bearish pressure on the yen. Conversely, market sentiment around the Federal Reserve is hinting at looming rate cuts, which could normally pressure the dollar, but current resilience suggests other forces are at play. The Bank of Japan is widely expected to maintain its steady, dovish interest rates next week, diverging from the Fed's anticipated 2 additional rate cuts in 2025, as forecasted by FX Street. This monetary policy divergence is a crucial long-term driver for USDJPY, suggesting a bullish lean for the pair in the latter half of 2025. On the broader economic front, U.S. jobless claims from Thursday were weak, but investors seem to have largely digested this, allowing the dollar to show some resolve. However, the U.S. Michigan Consumer Confidence Index, due later today, could cap the dollar's recovery if it indicates trade uncertainty weighing on consumer purchasing decisions. Now, let's turn our attention to the charts to see how these news events are reflected in price action. Looking at the one-day chart for USDJPY, we can observe the currency pair has experienced substantial volatility over the past year. Notice the strong upward trend from May 2024 to late June 2024, pushing prices from the low 150s to above 161, showcasing significant dollar strength. This was followed by a sharp reversal starting in early July 2024, as the pair dropped significantly. Let's zoom in on this specific period from July 30th to August 13th, 2024, to highlight a critical bearish reversal. Here, we saw the price decline sharply from around 155.00 to a low near 141.00, a move likely influenced by factors such as a weakening dollar or a temporary strengthening of the yen, perhaps related to risk-off sentiment. This period aligns with news mentions of the yen finding relief from political uncertainty and a weak dollar around that time frame. Following this sharp decline, the market found support around the 141.00 level before initiating a rebound, indicating a clear reversal point that traders should have watched closely. Returning to the full one-day chart, the period from early August 2025 leading up to today, September 14, 2025, shows USDJPY has largely been trading sideways. This aligns with reports of the pair ranging roughly between 146.00 and 149.00. We can identify a key support level emerging around 146.00 to 146.50, which has held multiple times during dips. On the upside, immediate resistance is visible around 148.00, with stiffer resistance anticipated near 148.15 to 148.20 according to FX Street analysts. A sustained break above this level could target the 200-day simple moving average, which some reports place near 148.75 or even 152.00. Now, let's examine the more granular price action on the 15-minute chart, covering the most recent days up to September 12, 2025. This timeframe confirms the current short-term range-bound behavior, with prices fluctuating primarily between 147.20 and 147.90. Volume data on this chart shows consistent trading activity, but without significant spikes that would indicate a strong directional conviction. The narrow candles and frequent overlaps signify a period of consolidation, as traders weigh the conflicting signals from a dovish BOJ against potential Fed rate cuts and Japanese political developments. For short-term traders, the levels of 147.20 as immediate support and 147.90 as immediate resistance are crucial to watch for potential breakouts or reversals. So, What are the reasons to be bullish or bearish for USDJPY, both short and long term? In the short term, the pair is likely to remain in a consolidation phase, possibly within the 147.00 to 148.20 range. Reasons for bullish sentiment include the ongoing political uncertainty in Japan, which weakens the yen, and the continued dovish stance of the Bank of Japan. Upcoming strong U.S. economic data, such as a positive Michigan Consumer Confidence Index or robust CPI figures, could also provide a catalyst for an upside breakout. Conversely, if U.S. economic indicators disappoint, or if there's any hint of a shift towards a more hawkish stance from the BOJ, we could see a push towards lower support levels. Looking at the longer term for 2025, the overall outlook from analysts like FexStreet's Yohai Elam leans bullish. While early 2025 might have seen bearish sentiment due to trade war fears and anticipated Fed rate cuts, a bullish turnaround is predicted for the following months. This is expected as global markets stabilize and the BOJ maintains its inaction on rate hikes, while the Fed potentially remains more hawkish than expected. Key resistance levels to watch on the long-term charts are 156.97, 161.81, and potentially 170.43. On the support side, 147.54, 139.73, and 136.72 are significant levels. A sustained break above the 149.15 monthly swing high would be a strong bullish trigger for the longer term. To recap, important price levels to monitor include the immediate support at 147.00, reinforced by the 146.30 to 146.20 zone. On the upside, 148.15 to 148.20 acts as stiff resistance, with 149.00 and 149.15 being critical breakout levels. For predictions, short-term consolidation between 147.00 and 148.20 is highly likely, with approximately a 70% probability given the current news and chart patterns. A break above 148.20, reinforced by strong U.S. economic data, could lead to a test of 148.75 and then 149.00, with a 60% likelihood under such conditions. Conversely, a sustained break below 147.00, potentially triggered by weak U.S. data or a perceived hawkish shift from the BOJ, could see price fall to 146.00, a 40% likelihood. The long-term bullish forecast for the latter half of 2025 holds a 65% probability, contingent on the Federal Reserve's actual rate path and the Bank of Japan's continued dovishness. Things to look for next week are the BOJ's interest rate decision, the U.S. Michigan Consumer Confidence Index, and especially the upcoming U.S. CPI data, which will significantly influence USDJPY's direction. Always remember to manage your risk and consider multiple factors before making any trading decisions. Thank you for joining Explain the Charts, and we'll see you next time for more in-depth analysis.